What's up, guys? What's going on? Welcome, everyone. I see we got Peru in the house today. Yo yo, we got Humex. you know, I used to drink those so many when I was a kid. Lagos, Nigeria. What's up? I see we got Trade Travel Impact. Miguel's in the house. We got the boy Will. Shout out Will, man. Will been going crazy with those Nasdaq swing trades. Sheesh. All right, I'll get the camera rolling. Actually, we'll get this going here to start things off. Here we go. What up, y'all? What's popping? We got Austin in here. What's up, my boy? Sean, Leo. We got Seth in the house. What's good? What's good, y'all? The Midwest is here. Okay, we got to represent. Midwest really has to start representing the trading culture. You don't really hear too much about the Midwest doing their thing. We got Vegas in here. Where did the braids go, my G? I gotta go. I gotta get them done again. Bro, it's maintenance. It gets itchy. It's a whole thing, bro. But they'll be back. They'll be back. Don't worry. PR en la casa. We got Puerto Rico in here. What's up, Bruno? Rio Grande. I think that's Colombia. What's up? What's up? Eric, my brother. East Coast in the house. Chile. ¿Qué tal, Felipe? Vegas, baby. What's up? Carlos. Medallo. We got Sad Bunny. How do we make you happy, Bunny? Is that a possibility? Is that in the near future? Colombia, tú sabes. Bueno. Let's get it. Phoenix. I love it. I love it. All right, guys. Just 5 minutes after the hour. Yesterday on the Spanish, I do a Spanish live stream too, every week for the culture. But I did start with a little bit of Q&A while we were waiting for everyone to hop on and things like that. So I'll open up the space for you guys as well while I'm maybe in between the chart work. We'll do a little Q&A, bring a little bit more awareness to the psychology aspect of things, the mindset, the overall state of a trader. There's a lot of shifts, a lot of changes, a lot of rewiring that needs to happen in order for us to really progress. So we'll dive into those things. That's what I want to do. I want to be able to put a little something, shift it up, change it up while we're in between chart work. Plus, the markets are a little bit slow to start off the week. So, there's only so much that we're going to be able to dive in here. But we got Vegas in the house. I see y'all. We got Colombia, Phoenix. Oh, Rio Grande City is in Texas. Oh, there's also a Rio Grande in Colombia. So, just so you know. Medallo, what's up? What's up? What's up? All right, so guys, I love the engagement in the chat. I love it in here. We got Denver in the house. ¿Qué tal? What's good? Sergio, what's up? Vahan, my boy. What's good? Good to have you on here, man. All right, so let's dive into it. We'll get into the nitty-gritty. And let's get into these charts. So, all right, we'll dive into a couple things that I know we wanna dive into. I'll break down some things that I do see with USD CAD. We may or may not have an entry. We'll see. Depends on where the market wants to go from here. But before I do all that, what up, Zoe? The boys in the North Pole. Enjoy. It's all good there. I love you too. I love you guys. All right, so cool. So look, guys, you do have some awareness to start things off. As you can see here with high impact news, there's not a lot going on. So, kind of strange, right? No news event for the dollar. No news event. Monday, no news event. Tuesday, no news event. Wednesday, so no high impact news for the US dollar currency. So you may find yourself relaxed. You may find yourself not in any trades. It's okay. It's normal. Or what you're going to find, and this is also very normal, what you're going to find is that your impulse is going to show up. You may have the desire to get into the market just because you're used to it. You're used to being in the market more than likely most days. So you might be itching, you know, you might have the itch. Like, I got to trade, man. Got to get me some pips. Got to get me some points. So it's okay. Relax. Maybe we might get some indices plays. Maybe tomorrow. Maybe Wednesday. I didn't end up trading anything today. So pretty chill day for me. The market just wasn't showing any signs of anything interesting. Could have, maybe shouldn't have gone into USD CAD buys. We'll dive into that. Didn't quite get to my price, but it is in our zone. So I'll dive into those things as well. And yeah, let's dive into it. Yeah, let's roll through here. Let's get this thing popping. So cool. What we have going on today. Now we do have some Australian dollar news. So if you are catching the live stream, then let's dive into some Australian pairs real quick. I will get back to the USD CAD. It's not a matter of urgency. So I'll get back to some dollar stuff. And there are a couple setups that are ready to maybe whether limits or they're getting close to the zone. But since we do have Australian news, there is one idea that I like, may or may not trigger. So I'm going to dive into that. And then, again, just go over some concepts that will give you guys some more clarity on your entries. But like I said, I want to be able to answer questions in between setups. So while we're looking through things, I'll take a little look over to the chat, see if there's any value I can give you guys. Because I do think that one of the most valuable things that someone can do for you is give you direct feedback to where you're at. In this space, one, there's just not a lot of people that have maybe gone through a lot of the entrepreneurial roller coaster, the traders roller coaster. And look, I'm not here to say that I'm at the top of the game either, because my entire net worth is people's stop loss, you know? So there's just levels to this game. There's people that have cleared $1 billion in a day here. So that's not what I'm here to say, but I'm about 9 years into the game, so I've been doing this for a little bit. And one of the things that I love to do is just give direct feedback, because I just feel like it allows people to break through very specific barriers, and you're able to get to that next step. So anything that you guys want to share here based on what you're going through, please do so. You know, don't be shy. It's a good time to do it. So Santa Ana, what's up? Let's go. All right, fire. So AUD CAD, you guys can see this perfectly. AUD CAD is not something that is giving me any sort of clarity here. We're making higher highs. There's quite a bit of imbalance. So maybe we get back down into this area at some point. I don't have entry levels. Now, obviously, the market has been pushing higher and higher and higher for AUD CAD. So could the market come down? Yeah, there's a likeliness, but do I have a entry? Because at the end of the day, guys, what ultimately pays you is having a consistent, dependable system. So just because you kind of think or feel like the market's going to go in one direction, do you really have any history that shows you like, hey, that's going to work out well over a course of time? You really have no proof. So just kind of going based off of your feeling, not really something that you can duplicate. Because at the end of the day, guys, I'm sure you've had moments where your guess works out, but then the longevity of that isn't battle tested. And so what we want really is to be able to do things well for a long period of time. You've been in the game for 9 years. What year did everything start clicking? I just think different aspects click at different times. So Yeah, I would say that I think a lot more came together overall around 2019. Like 20 towards the end of 2017 is where I was good enough to start making some money consistently, and I was able to transition off of some jobs. But even then, there's just so much that I thought I knew that I didn't. It's like you get to a point where you're like, well, I never thought I'd be here, or like, oh, this is a lot of it's making sense. But you realize you only know as much as you know. And then you realize there's just so much more. The game is much bigger than you think, whether it's technicals, whether it's your own behavior, your own mind, your own paradigms, your belief systems. So I think it's just constant evolution, and there's constant growth. And then you're just exposed to different parts of yourself, because as you scale in income and in your account balance, there's kind of new fears that you might reach, and it's a different game. So everything clicking at once, I don't even know if I'm still at that point. But I think that's kind of how trading goes. It's like you're never going to really be perfect, but you will get less immune to mistakes. You'll be less vulnerable to making big mistakes, and it's, maybe you'll still make mistakes here and there. I make mistakes. I had a mistake last month, but it's like they're less damaging. They're less severe, and also some things start to matter a lot less. And it's a complex game. The social aspect of things, the attachment to things in general, comparison and things like that. So a lot of things make some changes. But I'll get to the next question after the next chart. So, guys, with AUD/CAD, again, I mean, yes, the market's very bullish. The market's been going up, but there's no reason for me to sell. We can go all the way back to June of 2023, and that's kind of where we're at with price. But again, we're basically at equal highs. So I'm okay with staying out of AUD/CAD. So we can move on to something like AUD/CHF. And, one of my students, and they're hopping on to the higher time frames. You're looking at the weekly. It's like, all right, cool. We're paying attention to bigger things. And so not even so much talking about AUD/CHF here, but when you do start to focus a bit more on higher time frames, you get a better idea of what matters. And so here with AUD/CHF, you can see that during this month, this is now the monthly chart, right? During this month here, big moves to the upside before the market comes crashing down. When you look at this on the weekly, during this week, actually you have 2 weeks where the market goes up again. So it appears like this is going to be bullish, but then all of a sudden you get the true direction, and you can see that price didn't really intend to stay up here. The true direction of this was bearish, especially as it continues to work its way down. So what we know is that when price is up here, it's not so much because these are relevant prices and the market wants to be bullish, but this actually ends up trapping a lot of buyers and liquidating sellers before the market makes its decision. So I wouldn't be surprised, guys, if we do lose some momentum up in this area as we get to 61-ish, 61 area with AUD/CHF. And I know these are pairs that most people don't trade. These are some of the least popular pairs because they're so slow. But also, it's not so much about how many pips, how many points can I catch. It's about the risk to reward. So something like AUD/CHF, it may set you up so that you take a 7 pip stop loss and you make 21 pips. It's not a lot, but the risk reward is a pretty nice amount. I'm still at 3-1. So what does matter is not so much how many points or pips, but what is the stop loss compared to the reward. So something to keep in mind, right? So what we're getting at right now is AUD/CHF is looking to get into this massive weekly candle. And I do think it's worth just looking into a little bit. Could we be getting some sell opportunity somewhere in here? And now we're looking at the daily, and you can see that on the daily time frame, the market does start to work its way aggressively to the upside before it works its way down. So I would not be shocked if we do get some sell ideas over here. And one of the things that you can do, if you want to get more detail in the market, use your bar replay tool and bring it back to like right around here. If it lets me. Not sure what's going on there. All right, give me a second. Select bar. There we go. So as we look over here, we can look at, kind of what's going on here. And you can see a lot of the momentum starts here on the 9th of June in 2023. Big pushes up, big pushes up. Some good consolidation right over here. So let's see if we can get something out of this range, if there's any sort of, possible sell scenarios over here. But, I mean, not really. Just some imbalances. Here the market goes up, clears some highs, loses momentum, chops up really well. So, not so much. There's no, clear direction on what's happening here. On the smaller time frames, but what we can do is just stay on the lookout. So we have a pretty massive zone in here. So as the market starts to work its way higher right now, I would be on the lookout for some distribution. So what I mean is knowing us kind of knowing that, months back here, we do have some pretty decent movement. So let's say, for example, you can go to the daily. And when you look at the market here and you go, oh, okay, well, these were prices where the market just kind of melted away. So if the market does give us signs for sells in this area right below 61.50, then actually that's probably a good time to start to look for some sells. So we are getting to areas where on the higher time frame, the market could definitely turn around. So, as you see the market climb up, what you can do is this, right? You can start to just be mindful. Okay, the market's, giving us some uptrends. Maybe it's doing something like this. And as the market starts to scale, maybe you start to see maybe something like this ends up showing up, where you see some consolidation. You see the market liquidate, retail sells. Then it comes in back down and gives us a nice bearish structure. Cool. Okay, then this could be a good sign for some sells. And this maybe 1 hour time frame sell here also is aligned with the bigger time frame movements, right? When you have something like this, like the 1 hour, that's also in alignment with a big picture idea like we had here with kind of this weekly, monthly movement, you could start to see some nice movement around here, right? You can start to see that, oh, okay, if we do get some signs of reversals in, up in this area, 60, 61, just over here, then cool, you might be looking for some pretty decent pullback. So something to just keep in mind there. So is it an idea yet? Not quite, but it could be. It could be in the near future. So, okay, now we're sitting around odd JPY. And our JPY is at an interesting level because we do see a nice sweep of the highs here with equal highs, and it's specifically in this zone for odd JPY. Now, again, it's Asian session. Yesterday, the yen was on a bank holiday. Today, free game. So today you may be seeing volatility with the yen or with the Australian, either or. So now you have to ask yourself, well, what is the correlating pair to AUD JPY? Let me know in the chat, guys. What's a correlating pair to AUD JPY? Who can tell me? Because there's a couple, and it depends on what you want to correlate it to. So if you're thinking, well, Australian yen correlates with the New Zealand dollar, so then you can see, oh, well, NZD JPY, maybe that's something that's worth looking at, right? Oh, okay, well, let's take a look at that. And then what do we see? Well, NZD JPY, it's a little slower. right? You can look at this and you'll see, oh, well, NZD-JPY also had equal highs and some liquidity, but NZD-JPY, look at this, quite at that zone. It's actually a little short. Look at that. So NZD-JPY honestly might be a better idea for sells, because if the market does need to work its way just slightly higher, if it looks like price needs to go up a bit more with NZD-JPY, then couldn't this also push AUD-JPY higher as well? So one of the things that you can do if you want to compare two ideas is you can use the tool. You can use two things. One, you split the screen so it's easier for you to compare ideas. And you have odd JPY on one side, and you have NZD-JPY on the other. And so now, when you can compare them both, and you're looking at the movement, you're looking at how they connect with one another. One of the things that you can do is just use your Fibonacci tool, and you'll see, okay, well, what's pulling back and what's not. So for example, if we look at odd JPY that's on the left, you can see, oh, okay, well, right now the market's sitting in between that 786 and the 886. That's roughly what the market's doing right now. All right, cool. Well, what about NZD-JPY? You know, where is this at in its pullback right now? And when we take a look at this, you can see, well, NZD-JPY over here is right at that 786. So odd JPY here is actually slightly more bullish. So what's safer? The chances of NZD-JPY staying inside of this structure is actually a lot better than odd JPY, since odd is already kind of pushing up higher. So if I'm looking to, you know, possibly take a sell here with NZD-JPY, it would be with NZD-JPY, because the bulls are slightly stronger with odd JPY than NZD-JPY. Now that's also just looking at these two guys. I mean, look at it, guys, like they look similar. And this is what happens. What happens here is that, and this is why people have great setups and they might lose. How many times do you feel like you've seen just a textbook setup, and then it ends up stopping you out, even with you know, a smart money approach or a Wyckoff, you just get stopped out by a little, and then it runs your way. Well, if you haven't checked the correlating pair or the correlating asset, that might have had a slightly better advantage. And this happens a lot if you trade indices. For those of you that are on my live streams, right? For those of you that are members and you're on the live streams, I mean, you see it all the time. There's moments where we're like, all right, let's not take NAS and we'll take US 30 because of that, and vice versa. So in this example, I'll take NZD-JPY for a sell compared to odd JPY, because these are just so similarly correlated. And if you guys want to know more on that, then what you can do is you can take a look at the correlations. And there's this website that I like. I've been using it for so many years. It's the MyFX book correlation tool, and I'll drop it in the chat right here. So let's see, correlation website. There you go. So if I look at this and I pull up, let's say RJPY here, I click on it, I can see the top correlating pairs here depending on the time frames. So it all depends on the time frames. So right here, if I'm on the daily time frame, it's telling me that odd JPY and Euro JPY are way more correlated than odd JPY and NZD JPY. Okay. Well, if I'm looking at what's happening on, you know, a smaller time frame, like the 1 hour, then the odd 8 JPY and NZD JPY are 98.9% correlated. That's on the 1 hour. The 15 minutes, probably something similar. So when we do start to zoom out on time frames and we get to the daily and beyond, that's when it starts to discorrelate a bit more. I don't know if that's a word, but right now we're not trading the daily time frame, right? We're looking at what's going on like right now. You know, what's a setup that we can take here soon. So there isn't necessarily NZD news or anything, but it is getting pretty close. So I would be definitely interested in taking sells here with NZD JPY. And as a matter of fact, I think I'm gonna go ahead and set that up for us. Now, what you could do though, if you do want to be a little bit more diligent, what you can do is if you look at odd JPY and you look at any other pairs, let's say just odd NZD, you'll look at, oh well, odd NZD and odd JPY, they're nothing alike, right? Odd JPY and odd CHF, they're nothing alike. So odd JPY has just a stronger correlation with the yen pairs than anything else. And so it looks like the yen is really what moves this much better, much more effectively. So if I look at NZD JPY, again, here's what this looks like. It's pulling her up right into the zone. We're getting very close now. Well, what if we looked at, you know, Euro JPY, right? Well, Euro JPY here, as we compare one another, we can tell they're not moving similarly at all. So NZD JPY is going to be the case. So let me send you guys this chart, and then of course this is not advice or anything. I'm just going to do what I'm going to do. I just happen to be live here with y'all, and you're free to make whatever decisions that you wish to make. All I know is that I would definitely be following a consistent risk management plan. I would be following a strict risk plan for every setup, you know, just because I am the one that is going about this chart doesn't mean that you should be risking more. No. Here's the thing, you know what's helped me stay in the game is understanding that I have no idea. I have no idea when I'm going to be right. I don't. I really don't. I do have a pretty good idea that over a decent amount of trades, things are going to be in my favor. For sure. I wouldn't be here anymore if that wasn't the case. But what I don't know is when. I have no idea which ones out of the next 10 are going to be winners, which ones are going to be losers. I have no idea. I don't. But what I can tell you is that there's roughly like a 53% chance that it's going to be in my favor. I just don't know when that's going to play out. I have no idea. So what's up, Bavik? What's good, bro? Now that we're in between, right? Now that we're in between chats, like I said, charts, I did want to go over just a couple questions that you guys have rolling through here. Let's see. What do you think someone needs to do when he or she struggles with risk management? That's a fantastic question. So if you are struggling with risk management, one of the things that I like to remind you is that the problem isn't the risk management. The problem is more having to do with why you can't follow instructions, like your own instructions. So specifically, the reason we, for example, it's a case out of over leveraging, I'm assuming, right? And why is it that you over leverage? People put more money at risk because they want to make more money in that moment. So why do you need to make more money right now? Or why do you need to make a higher percentage? Why do you need to have a specific return right now? So it has to do either with money or with time. These are the most common variables behind risk management and things like that. Let's see here. What is this? Oh no, it's running an ad right now, isn't it? Can you guys hear me while an ad is running? Oh, that'd be crazy. Y'all let me know. Let me know if you can hear me while there's an ad running. I literally just saw that happen right there. That's so interesting. Is it just random? Yeah, muffled. Oh, yeah, I don't even know. This YouTube game is different. It's like a whole thing. That's wild. Okay, cool. That's so interesting. All right, anyways, guys, thanks for the 3 cents. I appreciate that. So, all right. So when it comes down to risk management, there's 2 big things that you want to keep in mind. One, it's what is influencing my perspective with money. Do I need money right now? Am I looking to make something back? So I guess it's 3 things. It's money, it's time, and then it's self-image. So either we're looking to catch up to a certain amount of money that we believe we should be at, or we're looking to make it back. I hear this one a lot, especially the longer you've been in the game. I got to make it back. I got to make it back. I got to make it back. Everything you gave has been given. There is no getting that back. That has already been given. If you lost it, you lost it. If you invested it, it's been invested. Regardless, it's gone. All right, it's gone in terms that you may not see a return on that financially. However, you can, with your perception, turn that into something of value, right? So there's money that we're looking to achieve for whatever reasons. Now, time can influence that. So is it that you felt like by now you were supposed to be somewhere? Is it that you need a certain amount of money or return by a certain amount of time because you not just over leveraged your account, but you financially are over leveraged, right? Where if you don't get certain returns, then you can't pay for certain things, or you need an investment because you maybe took a loan out or you're using credit or whatever it might be as well, right? So the timing of it is really important to be aware of. And then self-image. I see, and I went through this for sure, and I think it kind of like goes away over time, but it's always kind of there. It's just less there, but it's that we saw ourselves or see ourselves as someone at some point in a certain way. So we create this expectation, we create this image of who we're supposed to be, and whether that's right or wrong, it just depends on how you're defining yourself. But a lot of times I think sometimes it's just you learn about trading in a certain way and you thought it was going to be like this, but it's not. Depends on your environment, depends on who you follow and things of that nature. But sometimes we do just set a certain image that we're looking to catch up to. And so our risk management is stressed for all of those reasons. So it might not even be that you're not disciplined. It may just be that the weight of one of those things that I just mentioned are so much. So you have to then want to identify, okay, why is it that I can't follow my risk? A lot of the times it's time-based. Then it's, okay, is my belief just something I need to let go of? Is my belief behind, where I'm supposed to be right now, could that just be wrong? What if there is no timing? What if there is no, here's where I'm supposed to be? What if you're looking to live up to someone else's expectations that they're not even really supposed to be yours? And a lot of times, and this is definitely something that I went through, but I just hear this actually still to this day pretty often. It's that there are people who have no experience in what you're doing but have expectations about what you're doing. And that's kind of backwards now. How can someone that has no experience in your craft give you expectations about your craft? So why would you listen to someone else's expectations about something they have zero experience in? So that can lead to a healthy detachment. I will get to more questions here in a second. So let's get back to the charts real quick, and we'll get there. So NZD JPY, waiting for a sell here. I think we can see something good happen there. Now we were still diving into odd JPY, and if I'm going to zoom out a little bit more though, because there is something that is interesting to me, and it's this buy idea down here. So there's kind of two concepts here, two different scenarios, and this has to do with entries. So when it comes down to the entry, I walk you guys through like entries all the time. So the questions about entries, I'm literally giving it to you right now. But we have certain levels of liquidity here that we see. So equal lows here, more equal lows over here. And this massive push down here with odd JPY, this was influenced by the Israel on Iran attacks, the drone attacks here. This is Thursday, April 18th. Market liquidates tons of retail buys, orchestrated sell-offs, then the market rebalances, confirms bullish structure before we slowly but surely start to work our way down. All right, so cool. Other pairs. So there's other pairs that end in JPY. With this massive push down from Wednesday's FOMC, this got actually below some of these levels. Some structures look very similar, but the movement downs were just so much more aggressive. Some went even below their structure briefly before coming back up. Odd JPY didn't. This still stayed within the zone. So this is giving us signs that the market is in fact relatively bullish. I do believe we can get back here. However, the timing of these things, I just don't know when. And that's why I just wait and I do nothing. So because this is such a big zone, and I believe, if I'm not mistaken, it's like 155, 56, 50, 150-ish pips. There's two ways you can enter the market here. Now, I enter the market one way is inside of this orchestrated sell, inside of this institutional sell, right? In these moves, I like to see where we've seen support prior to this liquidation. And this is where I like to take some buys. So because we've seen some pretty strong levels of support here in the past, and you can see it, all around this area, right around these zones, you have some pretty strong levels of support here. So, but these are the zones that are pretty high probability areas. We can start to see around this area where the market could definitely start to pump up. So I could just take a 4-hour entry here based off of previous levels of support inside of our mitigation zone, because that's what this is called, a mitigation. Mitigation is where the market comes back to where it had left drawdown in the past, and then it closes off its sell, open up, buys, and is gone. Something in there. Or because it's such a big zone, you can just wait for fractal entries and then you're in there again. So, you can wait for something like that. So either you take an entry, or you can split it and you take half of your risk, whatever you would normally do in one trade, in one setup, you take half of that and you do it on this just 4-hour setup here, then you're in. And then if you get another opportunity, let's say you get a smaller time frame, when it's in here, it's on the 15-minute or something, and then you wait for a shift in momentum, and then you risk the other 0.5% or whatever half of your position might be. So it all depends on you, right? Risk management is very different for everybody because everyone's in a different circumstance. Everyone has a different risk tolerance. Some people work with losing streaks so differently than other people. Some people, for example, and so here I'm gonna send this chart in here real quick, and then I'm gonna go into another brief, breakdown here real quick. But here is odd JPY setup, and so for example, there are some people that can trade a risk reward of a 2.5 risk reward. So when you lose -1, right? -1 risk. And when you win 2.5 reward. So when you win, you're winning 2.5 more than when you lose. And some people can do that because they're okay with, they might, and that specific risk reward may work for them because they can also tolerate a certain amount of losing. Now, there might be some of you right now that you're probably better off trading a 1-to-1 maybe, or a 2-to-1 or somewhere in between. And you are exiting a little bit faster than maybe other people, but at least your win rate is a bit higher. Because the reality is everyone just has a different type of response to losing, to going break even, to winning. Some people just have a very hard time losing. So it may be better for you to not avoid losing, because you can't avoid losing, but your risk reward might just be better off being a little bit tighter because you don't have to endure losing as much. So that might work better for you. Or maybe you have a certain mindset where you just have a very, very good, healthy relationship with losing, and you only might be winning, 1 out of 3 trades, but you're able to follow that. You don't deviate from that plan, and so the 3-to-1s, the 4-to-1s may work out for you because you're okay with losing a little bit more frequently than, maybe other people. But when you win, you just win a lot bigger. And so that's something you do want to keep in mind when you are thinking about risk reward and, win rates and certain strategies and things like that. That might just give you a little bit more help. But what I do want to answer is another question here. So let me scroll up a little bit. How do you deal with the itching, like you said, of getting in the market every day, even when you don't have a setup/news? So that, I believe it comes down to our mindset, and a lot of the things that we do. If you do it more often, then you get good outcomes, right? For example, if you go, someone said, bro's getting a bag off of us right now. 4 cents at a time, my friend. So if you go and you run more and you move more, then you're probably going to burn more calories and maybe you're in better shape, right? If you are doing more sales calls and you're positioning yourself for more closes, you're probably going to make more money. All right? If you make more content, you're going to get better. And so in trading, more repetitions can get you better, but they won't maybe make you more money. So our desire to trade more often is because it's just normal for us to think that if I do more, then I'll make more, right? Put more hours in at work, you're going to get paid more because that's how it's set up for you, unless you're on salary, right? If you are, just think about infinite amounts of examples. For a lot of things, doing more gets you more. Now, you can get better at trading with more repetitions, and especially in your first year, even your first couple of years, if you're in a circumstance where there is no risk, then repetitions is everything, right? You are seeing more setups. Let's say you trade indices on small time frames, so you're getting involved more often, so you are developing the skill. But if you're not taking quality setups, then it may not serve you. It probably won't serve you. So that's the difference. Is with trading, it's not about quantity, it's about quality, quantity. And that's going to just depend on every trader. Some people are going to be better off trading only 10 times a month, but it's because you're taking very good setups that just make sense to you. And some of you just may be trading smaller time frames and you're able to go through losing more often, but because it doesn't deter you, right? You don't hesitate. You just keep going through the motions, and they're all quality setups for you. So if you do have that itch to be in the market, it could be because of your perception behind more means that you'll make more money, or also the impatience is just because you're looking to become or have certain things, and trust me, it's doing more doesn't necessarily do that for you. All right, let's see. I'm leaving off here. I have. All right, perfect. I got the next question here coming up soon. So, okay, we can move on. Now, we do have odd news here in about a little less than 3 hours. But for me, the only one that I really saw was odd JPY. I got nothing else here with the Australian pairs that interest me at all. We got AUD here. Interesting. Pretty big drop just recently. I don't know if that's just AUD USD or if that's all of them. Okay. Interesting. So AUD is making a nice drop. It's not really worth me doing anything here, but yeah, I mean, we are seeing some moves. Okay. All right. So still doesn't really change anything for me, but cool. Good to see. OddCAD paying right now. What did you trade with OddCAD? What did you get into here? I don't really, let's see. What did you take, Bobik? Where are you trading off of? What are you doing? So I don't necessarily know. Are you playing off of this daily candle from like June? Is this you? Is this what you're doing? Or are you just trading your own setups here? What's saying OddCAD paying right now? It's dropped like what, 20 points, 20 pips, 10, 15. You let me know, Bavik. I'm not necessarily sure what you're doing, but I'm happy if you're happy, bro. All right, cool. The click and pray method. I don't know if you can send charts on here. Here's what I'll do, Bavik. I'll make you a can I make you a moderator? You're gonna be a moderator now. You have been upgraded, sir. Let's see here. I don't know if you can do anything with that brand new status. Okay, so you are trading that area. All right, cool. Good stuff, bro. That's kind of what I thought. So, Bobik has been promoted. Good job, bro. All right, so we do have, outside of AUD, I mean, Tuesday nothing, Wednesday nothing. But, again, there are things outside of just currencies, guys. So, if you look at, for example, the metals calendar, metals here will show us that we have really not much going on until Thursday. Now, Thursday's U.S. unemployment claims. This is a currency news event that also influences metals. But what is interesting, if you guys look at, gold and silver, you do have China new loans. So this is going to be influencing metals for sure. So we will have on Thursday some Chinese news events that we can keep in mind as well. All right, guys. So keep in mind on that. We'll see. Keep that on your radar. See what China's been doing. And then energy. The energy calendar is also super, super good to have. It's basically the same every single week. But Wednesday, 9:30 a.m., you have oil inventories that are dropped. And then Thursday, our natural gas. And I am going to update natural gas here in a second because, guys, finally, oh my God, finally, natural gas did something. Y'all know the meme with the little character with the stick that's just like, hey, do something? That was me with natural gas. It was actually getting absurd. And I should have known because of the way that it's played out the last few cycles. But for those of you that have been following along natural gas with me here for the last few months, I want to show you guys what we finally got. So So natural gas, and I've been talking about this, and we went back and we looked at the cycles. There's here, I'll actually pull up a different here we go. So what you guys can see here is that natural gas does this pretty regularly. So during end of quarter one, start of quarter two, every 4 years, it just gives us some lows and then goes flying. This is 2012, 2016, again, quarter one, quarter two, again, same thing. We have it happen. And then again, 2020, you can see it here, how it's playing out. For a few months, it just sits around these lows, April, February, March, April, May, and then the market starts to ascend. So 4 years ago, end of quarter one, early quarter two, the market just starts to pump like crazy. Absolutely crazy. And then the market tanks over 80%. So kind of like Bitcoin. And so once the market got into these areas in February, I started to dive into, what's going on here with natural gas. And yeah, I have this setup here for quite a while. And so we did have this bigger picture idea. Again, looking to take this back over to over $5. And we're working. It's just moving on up. And so after, just watching this and looking at structure and things, the market is slowly but surely working its way higher. And so natural gas is in fact making moves finally. And it just required patience. Now, what I will add to this, because some of you are like, dude, I've never traded this before. Depending on your broker, you might not be able to. Depending on your broker, you may honestly not even hold it very long if you're just doing margin trading, because the swap fees sometimes aren't the best. Futures traders, this obviously you're not experiencing swap, so you're just kind of able to hold it out. But this is pretty textbook, Wyckoff textbook, smart money plays. So finally, natural gas doing its thing. But can I get a show of hand of how many U.S. oil traders do we have in the house? How many of y'all are trading U.S. oil in here? So I don't remember if it was last week, but for sure, for those of you that plug into the daily live streams, right? For all of you that are, members, you had the buy setup here. This one actually ended up triggering. Oh, snap. Hold up. I didn't see this happen earlier. No freaking way, man. This actually perfectly hit our entry. I had already deleted my order, so whatever, it is what it is. But on the open of the week, the market comes down to here, activates the buys, and then the market rolls through. So oil doing its thing, oil doing work. We had buy setups, starting to pump from those areas. I didn't get triggered in, whatever. But I do still have sell ideas that I'm looking at that I like. So I do think that we can work our way up to here at some point in time. And I'm going to zoom in a little bit more so we get a better idea here. But you do see the liquidity sweep up here. This happened actually, the news event. So on Wednesday, the Wednesday that just happened, tons of news events. But one of the first ones ends up sweeping the highs. So all of these retail sell entries liquidated, and then cleans up house, then drops, imbalance created, bearish structure, cemented. Clearly we're in a downtrend. So I still think that we can get a nice reversal off of this zone, because there's a very big buy position that happens here, clears out house, and then everything drops. So I think we can get back over here and sell off. And I believe this is going to be a little bit slower since we have no news events until Wednesday. There's no currency news events. There's no metals news events until Wednesday. Now, here's the thing, though. In my experience, when there's a few days of no news. Don't be surprised. Don't get caught off guard when suddenly there is a surprise something. Whether it's a surprise conference speech by the president, whichever puppet is around, whether it's a surprise attack, could be right now Russia, Ukraine, could be Israel, Iran, could be another fear-induced news event about some sort of disease, you name it. Something can happen. Could be a bank that finally collapses, even though it's been happening, you know? So don't be surprised when something like that does happen, especially when there are, you know, kind of like cool down phases in the market like we're seeing right now. So things like that can happen. So yeah, I think we can see U.S. oil sells sometime this week. Either way, we will have more movement with the U.S. dollar, but until Thursday. So let me go ahead and share here. I want to share this with you guys. U.S. oil, because I do see a nice sell, and I think we can get at least 3 risk reward, maybe a little bit more. Just depends on the scenario. So yeah, I mean, market's rolling. Market's moving good. And then let's see. My bad, guys. I do have one more setup that I want to go over that I feel pretty good about. Again, doesn't mean that you trade or risk more. It just looks pretty clean. And it's this USD CAD idea. Now USD CAD has done a great. It's been great price action. The market clears these lows, so it liquidates these retail buyers, liquidates these retail buyers, and as soon as it does that, it actually, on the smaller time frame, chops up briefly. So we have, you know, about an hour of some consolidation. The market spikes down one more time, then runs up, and finally gives us our higher high structure-wise. So we do finally end up seeing price trade above the previous high that was just set. And price is steady up here, right? It's here the rest of Friday and then Sunday Asian session. And it's not really until the second half of London session that it starts to dip down a little bit more. But either way, the market did go into our zone. So technically, if this, in my opinion, if this were to just keep on ripping to the upside, this could have been it. This could have been the mitigation. This could have been the close of the sell and the open of the buys. Now, I don't think that that's the case, because the way in which it would have reversed usually would be a lot stronger. So this might take some time. Now, also, another thing to consider with USD CAD in particular is that the Canadian dollar it is influenced by oil and oil's price action. So we may see oil's news influence USD CAD. So we may not get some clear movement. We might actually chop up here until that Wednesday news event. So something to keep in mind there. So we'll see. As of now, I'm still not in anything. I am waiting for the market to show its true intention. And again, here with USD CAD, the drop here was pretty decent. Like this drops 55 pips, give or take. So if the market were to pump 55 pips to the upside, which would actually put this above the previous high, then I would end up deleting my idea and just leaving this alone. So I'm going to set an alert up here in case it does get up here. Then that's when I'll just, all right, cool. USD CAD did its thing, and I guess it's just not going to be my friend. But here's the USD CAD idea that I do like. And let's see. Do I have time for one more? Sure. Let's do it. I'll do a quick crypto look. So I'll look at Bitcoin real quick. Now Bitcoin, guys. Bitcoin for me All right, peep this. So with Bitcoin, couple things. One, market rallied, yo. Market really rallied. Dropped down to sub 57K and then was like, psych. Right, quick, just a quick, no big deal, 15% move in a matter of just 4 days. Solid. The downsides. I do not appreciate the fact that as soon as this was that this got above the previous high, it lost all this momentum. So it almost gave us a break of structure. Price did get above, but this did not give me a lasting impression that price really wants to trade above, 64,750-ish, right? If price stays around 65K and we can get some just healthy price action open over here, then cool. I do feel a lot better about a bullish structure. So that's one thing. However, we saw the market pump up higher, and then we did see it work its way down, but we never got a shift in direction again, even on the smaller. So like the 1 hour is still bullish. It tried going lower, but every time it wanted to get below 63,000, prices is just not giving up. This is almost back at 64,000 again. So because we're not really seeing a clear lower low, in my opinion, the market is really struggling to give us these lower lows. I don't know if price is going to, I don't have enough clarity yet. I need a little bit more clarity. So could the market get back to this big candle, because this is a huge move. It's a huge, nice little pump here. So based on what the market does here, I think is how we're going to know what's really happening next. If the market gets to here and then drops aggressively and makes us lower lows, then I don't know if we're going to hold it down. We may keep going below that 57,000. If price gets up to here and we do, and we hold down the fort, then okay, we might be in business. So the best way also to look at this, guys, is not just looking at Bitcoin, and as I tell you guys every session, it's by understanding the total market cap as a whole. So I look at the total here, and this just gives me a better understanding of what's going on here in the market. When I look at this, and again, we zoom out and we're looking at, okay, what's happening in the market? What does everything really look like? Similarly, price almost gives us these higher highs here, and then it loses all this momentum. It clears up these retail equal highs, but then drops quickly. So right now it's kind of ranging. If we go back up here and we stay up here, I think we're game. Then I think crypto stays. We'll probably see a pullback, back under 60K, but then it rips up again. If price just keeps working its way lower, then I don't know if it's going to hold down this low. So it is really important kind of what happens here soon. Now that's just understanding Bitcoin. If we put into the market ETH, or if we take away ETH and we look at strictly altcoins, if we're looking at strictly altcoins, then guys, the market is, it's pretty bullish. Like altcoins market is starting to take over. So I know this isn't, currencies and margin trading is a little different and things like that. But when I'm looking at the dominance and I'm looking at overall, okay, what is Bitcoin starting to do? Is it starting to lose some steam? You tell me. What does this show you right now? I'm about to zoom out. Hold on. The dramatic effect is coming here shortly. So Bitcoin dominance cleared these highs and then just started losing steam. There is a good chance that Bitcoin season might be slowly coming to its end, and that altcoin season may be here to stay. Now, before I jump the gun there, I do want to add that, we got to some imbalances from 2021, April of 2021. I do believe we can go higher. So I'm not fully convicted on that yet by any means. We're still bullish with this Bitcoin dominance chart. So, you know, just be patient. But anyways, yeah, guys. So with crypto, we're at a pretty interesting. We're getting closer to knowing exactly what can happen next. And then what I'll say is this, guys: be patient with the markets. So far, everything is happening at a very slow pace to start the week. So just allow the market to give you the details. Do not force any entries. Do not force any trades. In my opinion, we're just not really seeing textbook ideas quite yet. Not so much. I think if we just stay patient, we'll be able to just have better opportunities overall. So, yeah, guys, I mean, to wrap up the stream, love the chat in here. You guys are crushing it. Totally wasn't charging this like I thought it was. Oops. Here we go. And then I'll answer one more question that's in here. What were some of the biggest mistakes that you were making at first that you don't really make anymore? The biggest one I think is just over leveraging, putting a lot at risk. In the beginning, one, I just didn't know what I was supposed to be doing, and two, I was kind of just looking to flip accounts, like a small amount of money, and then just just throw whatever at it. So yeah, that changed the philosophy overall. The chances of success are a lot higher by just depositing, a certain amount of money every week or whenever you get paid, and just trading a pretty consistent risk percentage than just going big wick energy every trade. So yeah, I mean, but that kind of stopped happening in late 2017, 2018. From there, yes, that's kind of the biggest one. That one got in my way a lot. How do you pay taxes as a trader? I would communicate with your accountant about that one, and it also really depends on where you are in the planet. All right, here we go. I personally do a 1 to 2 risk reward. I try to do 1 to 3, but my patient gets tested so much. So yeah, I mean, it's like you can either look to evolve your patience and then just work on that and make that a central focus on you, or you don't fight yourself and you work on 1 to 2s until you can just inch your way forward. Like, you don't have to go from 1 to 2 to 1 to 3. You can go from a 1 to 2 to a 1.205 or 1.21, and then you do that and you kind of start to see, what's my win rate still look like when I backtest my ideas. Would I be making more money if I let this run a little bit more? Because the truth is, depending on your strategy, you may make less money by trading 1 to 3, because maybe you miss more trades and they don't actually go that full extension to the 1 to 3. So it also depends. Cool. So let's see. Last question I see here is, do you have any advice on avoiding closing a trade early? Yeah, so if you're closing your trades early, is it because you just see something different? Like, here's what I would say. Create a scenario or scenarios in which, if this shows up in the market, then I will exit early. I will close my trade manually because this situation is giving me the signs that the market's going to reverse on me. And so if you have those scenarios, and if those things don't happen, then you can't close your trade early. Because if that doesn't show up, then the only reason you're closing your trade early is solely because of emotions. So that's the beauty of predetermined plans, is that you set up those plans when there were no emotions at stake. There were no emotions on the table. So get back to that. All right, guys. Well, much love. Appreciate y'all for plugging in. We do these all the time. In the description, guys, I have a whole bunch of resources and things for you guys to follow up with. Myself, Nancy, Mike Sotero and Junior Munoz. We're going to be traveling all across the U.S., city to city. So if you are in San Antonio, if you are in Dallas-Fort Worth, Phoenix, LA, Oxnard area, Seattle, or Chicago, then I do have info for the tickets in the description if you guys want to check that out. That we're going to be in person. We're going to be doing workshop-based stuff, so working together, whether it's entry techniques, exits, psychology stuff, and then crypto also. So if you guys want to plug in there, kind of hang out in person, let us know. You can get a ticket to go there. For us, it's really just basically to break even on the event space more than anything and cover our flights. But yeah, it's really just to kind of get the community together, and it's always cool to have that experience. So we would love to see you guys there. And then if you guys want anything else or more, any additional follow-up, then just in the description, there's a whole bunch of ways so you guys can just reach out to me. But much love, y'all. And if someone invited you to this, well, then either thank them because you had a good time or tell them to never send you a text again. But yeah, peace out, guys.